Hello and welcome to Money Management. This week we take a look at the rapidly shrinking agribusiness MIS sector. But first, here's your news roundup, brought to you by Securitor. Research from Roy Morgan has pointed to continuing investor confusion about the independence of financial advisors. According to Roy Morgan, 62% of consumers believe Financial Wisdom is independent of CBA, 58% believe Garvan and Godfrey Pembroke are independent of NAB, and 50% believe Hill Ross is independent of AMP. Meanwhile, advisors aligned with AMP, AXA, CBA and Westpac BT continue to place between 73 and 82% of clients' super savings into in-house products. KPMG initiated a High Court challenge against ASIC over compensation payments for Westpoint investors. ASIC began action against KPMG in 2004 over its auditing of companies in the failed Westpoint group. If KPMG is successful, ASIC won't be able to continue to seek $200 million in compensation against the group. There continues to be more political mudslinging over the Rudd government's plans to increase the superannuation guarantee to 12%, a move that has not had bipartisan support. IFSA Chief John Brogden called on the opposition to reverse its decision to contest the increase. At an AFA lunch in Sydney, Richard Clippan warned the advice industry must be more vigilant in exposing bad practices, saying the reputation of the entire industry was at stake. At the same lunch, Financial Services Minister Chris Bowen made it clear making financial advice costs tax deductible is not an issue on the Rudd government's agenda. Meanwhile, the consultation period for Bowen's proposed reforms to the advice industry opened last week. Those interested can get involved at the website futureofadvice.treasury.gov.au. Listed financial services group Superwoman is undergoing an internal review following concerns over a related party loan. The former head of the group, Colin Grant, as well as the chairman and another independent director have recently resigned. Superwoman last month took a 30% stake in Michael Summers' dealer group, My Advisor. Research conducted by Macquarie confirmed boutique advice firms are writing more risk business to combat falling investment revenues. Macquarie's Liz McCarthy said 43% of firms surveyed had generated more than 10% of their revenue from risk writing over the past year, while over the past 2 years, average funds under advice had fallen by 26% to $136 million. AMP has consolidated its superannuation offering, with Craig Mellor saying AMP Flexible Super would now replace a number of the group's existing retail and corporate super products. And Macquarie Life, headed by Justin Delaney, broke new ground in the insurance landscape by introducing a product that covers life, trauma and TPD within a single policy. In this week's Money Management, Caroline Munro reports on the controversial opt-in arrangements canvassed as part of Chris Bowen's Future of Financial Advice reforms. And Mike Taylor talks to research houses about the embattled agribusiness MIS market. As Van Eyck Research Chief Executive Mark Thomas points out, the problems facing this sector have been a long time coming.
I think what you need to understand is this is not just an overnight phenomenon. You've had a amount of money that's come into this segment unnaturally as a result of some government policies which extend back a decade or so. When you get policies encouraging people to make investment, you're going to get some element of corruption and mismanagement of resources, and people will suffer. But the bottom line is that you've had unnatural money coming in through incentives. But who's to blame? There's a lot of people to blame. There's the government, there's the advisors, there's the practices of the operators, and ultimately, they all have to share in it.
For all the details on those stories, see tomorrow's edition of Money Management. Thank you for joining us, and I'll see you again next week.